Hello everyone. In our previous session, we have seen the rules of journal entries. We have seen traditional approach and we have seen how to derive modern approach from the traditional approach. In this session, we are going to implement those rules. We will solve 20 questions on journal entries. Okay. So first of all, let's write down modern approach again. Okay, so that it will be easy to perform journal entries after that. So we have seen that when assets, expenses, and losses, when they were increased, okay, they were debited. For debit, we will use the symbol DR. And when they were decreased, when they were decreased, they were credited. And for credit, we will use the symbol CR. Okay. Now the reverse rule applies to capital, liability, revenue, and gains. When capital, liability, revenue, or gain increases, they are credited. And when they are decreased, they are debited. So this is what we have learned in our previous class. Now, let's implement these rules on the journal entry. Okay, so here I have taken 20 questions on journal entry. Now let us suppose that we are performing these journal entries in the books of Mr. A. Okay? Or you can say we are performing this journal entry in the books of A Limited. Okay? So journal entries in the books of A Limited. Now, the very first entry says that it started business with cash rupees 5 lakh. Okay, but before that, let's complete the format of journal. The journal format is simple. In first column, you should write date. Okay. In second column, we will write particulars. In third column, ledger folio. Now, what is ledger folio? That I'll explain you when I'll start with ledger. Okay. In fourth column, we will write debit. In last column, we are going to write credit. Okay. Now, the very first entry says that it started business with cash, rupees 5 lakh. Right? So what is happening here? See, first step in performing journal entries is understanding or identifying to which class or which category, okay, the item belongs to. So there are two items here, if you can clearly see. There is cash and there is capital. Now let me make you understand how I have arrived at these two classification. Okay. So we are introducing cash into our business. Okay. And we know that the cash introduced by the owner is a capital or internal liability for the business. Now, if you observe carefully, we have categorized, we have grouped these two accounts. Okay. We have grouped cash as an asset and capital as a liability. Okay. Liability. Fine. When Cash is increased, it is debited, as we know. So when you are introducing cash in the business, the cash in the form of asset is increasing. Okay, is increasing, is increasing. Therefore, it will be debited. And along with that, capital is also increasing. Capital is also increasing because when the money is invested by the owner, it is treated as an internal liability as per separate entity concept. And according to that, the liability is also increasing, and increase in liability is credited. Okay. So I hope this is clear. Now, let's now write it down in the form of journal. So here cash account is debited to capital account, and we have already seen the logic behind it. Cash is an asset. We have identified first of all that cash is an asset, and then we saw that it is increasing, and then we debited it. For the capital, we followed the same step. First of all, we categorized it as a liability, and we saw that it is increasing, and therefore we credited it. Okay, so this is the proper way of journalizing a transaction. All right. So cash account debit to capital account. And one more thing, we do narration here. Okay. Being cash introduced. Or you can just write down the statement. Started business with cash rupees 5 lakh as a narration here. Okay, there will be no problem. Now, what was the amount? Rupees 5 lakh in both the columns. Okay, 5 lakh in debit column as well as in credit column. Now, the second entry. Deposited 2 lakh into bank. Okay, deposited rupees 2 lakh into bank. So again, what is bank? Bank here is a asset account. Okay, bank here is a asset account. See, in this case, bank is a asset here. How? Let's understand that. See, bank and cash. There are two elements here. There are two accounts here, bank and cash. So bank is an asset. How? See, when we deposit money in the bank, bank becomes our debtor. And what is debtor? What is debtor? Debtor is a person who owes the money to the business, okay, or who owes the money to us, okay, that is called debtor. And since it is an asset, okay, and it is increasing in the form of debtor, therefore it is debited. Cash on the other end is asset, but what is happening here? It is decreasing. Cash is decreasing here, and therefore it is credited. Okay, I hope the logic is clear here also. Now the narration will be deposited cash into bank. Okay. Now this is also called contra entry. Okay. In when we will learn cash book, then we will also see why it is called contra entry. Okay. So here it is rupees 2 lakh. Fine. Now, the next entry is purchased furniture for cash rupees 40,000. Purchased furniture for cash rupees 40,000. So furniture, what is furniture? Furniture is an asset. Furniture is an asset. And to purchase the furniture, we are paying cash. To purchase the furniture, we are paying cash. What is the amount here? 40,000. 40,000. Narration should be narration should be purchased furniture. Simple. Okay. So furniture is an asset. Asset is increasing, therefore debited. Cash is also an asset. Cash is decreasing, therefore credited. The same logic as we have seen earlier in earlier transaction. Now, purchased machinery by check 1,20,000. Okay. Purchased machinery by check 1,20,000. So machinery is what? What is machinery? Machinery is an asset. Okay. Machinery is an asset. And machinery is increasing. So machinery account debited to bank account. Okay. Machinery account debited to bank account. Why? Why I'm using bank account here? Because we are paying money with the help of check. So bank balance is decreasing. Okay. Therefore, it is credited. And we have also seen that bank account is an asset account. And when asset decreases, it is credited. Okay. So purchased machinery should be the narration for that. Purchased machinery. What is the amount here? 1,20,000. Okay, next transaction. Next transaction is purchased goods for cash rupees 60,000. Okay. Purchased goods for cash rupees 60,000. So let's do that transaction also. This is the fifth transaction that we are going to do. Now, when we purchase goods, okay, we purchase it to convert it into finished goods and then resale into the market. Okay. So whenever we purchase goods for resale, it will be called as purchases. Okay. Whenever the goods are purchased for resale, it is called purchases. So we will not write here goods account. Okay. We will use the word purchases. Why? Because it has to be resold in the market. Now, purchases account debited to cash account. We have to pay cash to purchase the goods. Therefore, we are crediting cash account here. Fine. The amount is rupees 60,000. Purchased goods. Purchased goods. The next point is purchased goods from Naram on credit. Okay. Now here you have to pay attention. Okay. You have to be careful here. Purchased goods from Ram on credit. Now goods are purchased. So now we know that whenever we are purchasing goods, it is being purchased for resale. Therefore, instead of using goods, we use purchases account. Okay. So purchase account is debited. That is very much clear. But which account will be credited here? That is the question. Okay. Because it is not purchased for cash. Okay. It is clearly written that it is purchased on credit. So Ram's account will be credited to Ram's account. How much amount? 80,000. 80,000. Now, let me make this transaction much more clear to you. See, here, purchase, there are two accounts, purchases and Ram. Okay, there are two accounts here, purchases and Ram. Now, purchase, you can say it is either asset because goods are there, or you can say it is an expense. So purchase can be seen as an asset as well as an expense. Okay. Either way, you will do the right entry. Okay. There is no uh, question in that. Okay. So it is debited here because purchase, if seen as an asset, it is increasing, therefore debited. If seen as an expense, in that way it is also increasing, therefore debited. Now, Ram. We are purchasing the goods from Ram on credit. So clearly Ram is our creditor and creditor is a liability. Creditor is a liability because it shows the future obligation for payment. Okay. And therefore credited. Liability is always credited. So that's what we have done here. That's what we have done here. We have credited Ram. Now, what should be the narration? Purchased goods on credit from Ram. Purchased goods on credit from Ram. Okay. Purchased goods on credit from Ram. Okay. I hope this is clear to you. Now let's do the seventh entry. Seventh entry says sold goods for cash rupees 1,10,000. Okay. Now, if we are selling goods for cash, cash is coming in. Okay. If we are selling goods for cash, cash is increasing and cash is an asset. Cash is an asset. Therefore, it is debited. Now, the credit account will be sales account. Why? Because sales is a revenue and increase in revenue is always credited. Okay, we have already seen that increase in revenue is always credited. Okay, sales here is revenue and increase in revenue is credited, always credited. Fine, we have already seen that. Now, what should be the narration? Goods sold for cash. What is the amount? 1,10,000. 1,10,000. Fine. Now, moving ahead. Sold goods to Shyam on credit rupees 75,000. The eighth transaction is sold goods to Shyam on credit rupees 75,000. So we are selling goods to Shyam on credit. Shyam account will be debited. to sales account. Why? Why Shyam account should be debited? What is the reason? See, Shyam becomes debtor. Shyam becomes debtor here. Okay. Therefore, it becomes an asset. Shyam becomes debtor, and debtor is a asset. Okay. And hence it is debited. So narration will be sold goods to Shyam on credit. What is the amount? 75,000. All right. Now the ninth entry. The ninth entry says that paid salaries rupees 15,000. Okay. Now this is again a simple transaction. See, salaries is an expense, therefore it is debited. Okay. And obviously it is paid for cash, therefore cash is credited. Therefore cash is credited. What is the amount? 15,000. For 15,000. Okay. So let's write down the narration also. Paid salaries. Paid salaries. Okay. So in this case, let me explain it a little bit better to you. See, salaries, we have classified it as an expense, and expense is increasing, therefore it is debited. On the other hand, we have paid cash. Okay. We have paid cash. Cash is an asset. Asset is decreasing, therefore it is credited. Okay. The 10th point. The 10th point says that paid rent by check rupees 12,000. So what is rent? Rent is again an expense. Rent and expense, and it is paid through check. So bank account will be credited here. I have already told you how to handle such kind of transaction. Okay. Where bank comes. Okay. Rent is an expense. It is increasing, therefore debited. Bank account is a asset account and it is decreasing, therefore it is credited. Okay. Narration will be paid rent. Paid rent. What is the amount? 12,000. Fine. Moving to the 11th entry. Moving to the 11th entry. Okay. So there is a little bit of error. Let me correct it and then we will proceed. Okay. Okay. All right. So it is corrected now. 11th one is received commission. received commission. So commission is what? It is a revenue. Okay, you are receiving commission for some services that you have delivered. So it becomes your revenue. Okay. It becomes your revenue. Wait, just wait a second. And commission is received in cash. Commission is received in cash. If it is received in cash, then it will be then it will be cash account will be debited to commission account. Why? Because commission is a revenue and increase in revenue is credited. Now, with that, along with that, cash is also increasing. Therefore, it is debited. The amount is rupees 8,000. Okay. Commission received. The narration will go like this. Commission received. 12th transaction is paid electricity bill 3,500. So electricity bill is again an expense and all the expenses are debited. Therefore, electricity account debited to cash account. The amount is going to be 3,500. 3,500. All right. The narration should be paid electricity bill. Paid electricity bill. 13th entry. 13th entry says that withdrew cash from bank for office use, rupees 20,000. Okay. Withdrew cash from bank for office use. So there are two accounts affected again. If cash is being withdrawn from bank, cash is increasing, therefore cash account debited, but the bank balance is decreasing and bank is also an asset and decrease in asset is credited. Therefore, bank account is credited here. What should be the amount? 20,000. All right. Withdrew cash from bank for office use. That will be the narration here. That is going to be the narration here. Withdrew cash for office use. For office use. Now, the next one is withdrew cash for personal use. Okay. So here we need to be very careful. Withdrew cash for personal use. See, when the proprietor withdraws cash for personal use, proprietor means owner. Okay. So when owner withdraws cash for personal use, okay, then Actually, he is withdrawing from his capital. Okay. I am repeating it again. When proprietor withdraws cash for personal use, he is actually reducing his capital. Okay. And reduction is and capital is a liability. Therefore, its reduction will be debited. Okay. And its reduction is known as drawing. Therefore, drawing account will be debited to cash account. The amount is rupees 10,000. So, withdrew cash for personal use. Withdrew cash for personal use. Okay.